Shae Russell from mining.com.au, and once again it's that time of the week where Mr. Data Dan Petrie joins us to talk all things numbers. Dan, it is great to see you again. How are you?
I'm well, thank you, Shae. How are you?
Excellent. We're going to be talking about my second favourite topic in that second half of today's conversation, and that is the RBA and interest rates. But first and foremost, I wouldn't mind starting out with a metals conversation. Now, I have a look at the copper price this week, and it seems a little bit hamstrung by what Trump may or may not do with tariffs. Aluminium looks to be the same. Mate, what are these metals reacting to? But also, to more importantly, what does the data tell us about these metals right now?
Well, a very good morning to you, Shae. And this is really what we're seeing as this classic thing where sentiment overrides actuals. And so, as you well know, I've been quite tortured looking into this, what's going on in the Shanghai ports, like what's on demand, what's not. And so, um, I've actually got all that data, and I can tell you now that sometimes the port data tells you the actual story as opposed to the headline thematic. And so there's always that saying, I should say, that investors like, which is, buying the rumor, selling the news. But we should really probably add the caveat, do your research, which is there is a story underlying all this. Like, I mean, if I was to give you just a run through the Rolodex of actual tonnage currently as a deliverable in the Shanghai ports. Aluminium, 176,000 tons. Oxide, 34,000 tons. Bitumen, 74,000 tons. Copper, 98,000 with a deliverable. And a further on warrant, 21,000 tons, that is. Lead, 39,000. Natural rubber, nickel, pulp. This is very, very strong numbers, these are deliverables, as in they're going to factories. And so when you start looking at the likes of zinc, of course, there's the wire rods. This is a very, very busy part of the day. And I know that people like to talk about a growth story, but sometimes you actually have to talk about what the actual story is. These businesses, these organizations, which, rely heavily on this particular market, which again, does move the needle when it comes to bulk metals, especially, and precious metals as well, I should say. There's a very, very good story and still robust. And so sometimes, when people talk about, what's going to happen with tariffs and these things, it's very hard to see, well, what has actually happened. And at the moment, it's still, business has to kind of keep going on, not kind of worrying about what's in the future. And so while sentiment has been an overriding thematic, which we've seen in the last 3 months since the election of Donald Trump, the actuals in terms of what's been delivered, what's been going to factories, are still very, very strong.
That essentially tells us that it's doom and gloom in the headlines, but the movement of metals across the globe is still strong.
Well, that's correct. And, there's a couple of, the headline story is it's all doom and gloom. What's going to happen? Well, in the American case, they've got a deficit of steel for a number of their infrastructure projects. They're having to build New Deal era infrastructure, bridges, roads, you name it. So they've got a very good story. Even before Donald Trump came into office, I mean, Joe Biden would probably be smarting from the fact that he's handed over an economy. And typically, a stock market, for want of a terrible way to measure your presidency, but that has been quite elevated. That's notwithstanding the buzz around AI, but the truth of the matter is the investment infrastructure pipeline from a public perspective as well as a private one remains robust. And I think that's probably where we're probably getting lost a little bit, and everyone wants a record and they go, oh, record number was shipped. But what's actually happening on the industrial production front, and it's still relatively elevated next to other periods in time, I dare say.
Now, it was stated earlier in the week that when Australian inflation data dropped, it would be the make or break case for a rate cut for the RBA. Now, the RBA doesn't meet for a couple more weeks. I believe it's the 18th of February, I think that meeting is. So the first one for 2025, with inflation data still technically sitting outside of the band based on what the RBA chooses to look at. Tell me, what do these numbers tell you about the health of the Australian economy?
Well, they're very, very good numbers in terms of what you want to be seeing in the trajectory of inflation in terms of the environment if the central bank was to lower rates. Now, The other thing which we should also talk about inflation coming down is that that's the double-edged sword, that it means demand or growth is often slowing as well in unison. So uh, the one thing central banks are forward-looking, and they like to be ahead of the proverbial curve. And so, in other words, they like to be, you know, if the case is there to lower the benchmark interest rate, I think it'd be close to 4.15%, then the central banks typically, historically, have actually gone earlier rather than later, which is kind of somewhat a bit strange given what we saw in COVID. Normally, central banks tend to be ahead of the proverbial curve based on the data they're receiving. And remember, they get a lot of data. That's not just clearance rates out of ATMs and payment systems and transfers and all sorts of things. It is actually what they're seeing, and policymakers want to have a policy setting which is ahead of time. Now, this was very different during the COVID period, where the messaging from the bank, and this is the first time I've ever seen it, had become quite uh, that the board of the Reserve Bank and Dr. Philip Lowe really wore a lot of heat of this about keeping rates on hold, saying they wouldn't rise, and of course you had a big pile on into property. The government loved to blame the central bank, but didn't actually look at their own role in this in terms of their high fiscal stimulus, which happened at the same time as record low interest rates. That does manifest in inflation. So by and large, it's been quite interesting. I would dare say that if the money markets are probably now starting to factor in a February rate cut, with uh, a lot more doors being open to it, because the trajectory of inflation is certainly on the downward trend, and probably now, I don't know if necessarily the board would want to wait another quarter. And remember, this is one data point. They'd have to look at it also with respect to uh, employment, which is also, the cost of wages still factors in quite heavily, but also the cost of utilities, electricity and water into that equation. So there's still a moving feast, but I would say, just in terms of the history, central banks like to be ahead of the curve. What we saw during the COVID period was more out of character for the RBA, not so much a characteristic of the RBA, if that makes any sense.
Now, we are running this down to the wire today, Dan, as you have places to go and people to see. But before I let you off the hook, tell me, what is the data coming out in the next 7 days that we should all be looking for?
Well, big data dumps. So we're heading into that first week of the month. Now we'll be getting the PMI reports. We'll be getting the first cut of trade, which will give us a full year of December. So that's really what the pencil and the erasers, if you like, will be looking at over the coming days.
All righty, Dan, I certainly look forward to discussing those with you next week. Thank you so much for being here today.
Pleasure, Shae. Bye now.